Okay, so is the housing market starting to show signs of a pop? That's the big question, right?
It really is.
And, could what's happening down in Texas, one of the fastest growing states, actually be signaling something bigger for the economy?
Yeah, it's certainly a development that's catching people off guard. What looks like a small change maybe could actually be pointing to some uh, pretty significant underlying forces in the real estate market.
Okay, yeah, let's definitely unpack this then. Today, we're going to dig into some really fascinating material.
Hmm.
It highlights how this unique situation in, well, a booming state like Texas might give us some crucial clues about the wider economy.
Mm-hmm.
So our mission, as always, is to get past the headlines, look at the details and figure out what it all actually means for you. Now, you've probably seen the headlines or at least felt the effects of that dramatic boom in Texas home prices after the pandemic. It was a truly wild ride.
Oh, absolutely. A wild ride is putting it mildly. I mean, the typical single-family home there, it went from around $206,000 back in January 2019 to $300,000 by the end of 2024. Just think about that.
Wow.
That's a 50% price jump, 50%, in like 3 short years.
Incredible.
Yeah, and it was definitely fueled by, that perfect storm, super low interest rates, tons of people moving in from expensive states, and just a red-hot market overall.
But here's where it gets interesting. The twist, right?
Mm-hmm.
Despite those huge gains, Texas is now in the news for, well, the opposite reason.
Yeah.
Experts are starting to talk about a potential real estate bubble.
Mm-hmm.
And some are even saying, it's already starting to pop.
That's exactly right. Since around August 2022, give or take, home prices there have actually started to dip. The typical house, after hitting its peak, has lost about 2.26% of its value.
Okay, 2.26%. Now, that sounds almost tiny, doesn't it? Especially after a 50% run-up.
It does sound tiny, yeah, and that's why on the surface it might seem negligible.
So why does this small percentage drop look a whole lot worse when you dig into the data, as you put it? What's really going on beneath that number?
Right, that's the crucial question. Because while the price dip itself is small so far, the reason it's causing anxiety, especially for agents and sellers down there, is because it's happening alongside a really fundamental shift in supply. That's the real story.
Okay. And this brings us to what's really interesting then. This core issue, this growing unease.
Yeah.
It's about a massive supply problem in the Texas housing market.
Precisely, yeah. When you look closely at the data, it's pretty stark. Many areas in Texas, especially big places like Dallas and Houston, they've seen active housing inventory shoot up by over 20% year over year.
20%?
Yeah, and in some semi-rural spots, the jumps are even bigger. But here's the kicker. Out of the 4 major Texas cities, Houston, Austin, San Antonio, Dallas, 3 of them right now have more homes listed for sale than they did before the pandemic even started.
More than pre-pandemic level.
More than their pre-pandemic averages, yes. Houston is just hovering right below that line, but it's expected to cross it any day now. And this surge in homes for sale, this inventory buildup, that's the first really critical ingredient you need for prices to potentially adjust downwards in a meaningful way. Without having too many homes on the market, the dynamics just won't shift much, even with high prices and higher interest rates.
Gotcha.
So that's why that little 2.26% drop feels more significant when you see all this inventory piling up behind it.
And this trend, this inventory building, basically more sellers than buyers.
Yeah.
It's not just a Texas thing, right? You're saying it's more pronounced there and maybe across the South, but we're seeing hints of this elsewhere too.
Exactly. We are seeing consistent evidence of supply increasing really across the board nationally, but it's definitely most pronounced in Texas and the southern states. I mean, just look at recent numbers. 1 week, there were 51,000 new listings that didn't sell immediately.
Yeah.
That's 13% more unsold new listings than the same week last year. And even if you include the homes that sold right away, we still had 4% more sellers hitting the market than a year ago.
So more people are listing their homes.
More people listing, yeah. And it's not just a blip. It continues this pattern we've seen building. 2025 is carrying on the trend from 2024, which already had more sellers than 2023. It feels like we're finally, getting back towards more normal levels of sellers and inventory. We've actually been out of that crazy pandemic market frenzy for longer than we were in it now. But, and this is important, the contrast between the national inventory picture and Texas is really striking.
Okay, how so?
Well, nationally, inventory plummeted during the pandemic, right? And it still hasn't really recovered to where it was back in, say, January 2018. We still have about 20% fewer homes listed nationwide today compared to then.
20% fewer nationally.
But in Texas, the picture flips completely. Every single major city there now has significantly more homes for sale than in January 2018.
More, even compared to way back then.
Way more. Take Houston and San Antonio. Both are sitting on roughly 50% more homes listed now than before the pandemic. And compared to the absolute lows during the pandemic, it's like 200% more inventory.
Oh, that's a huge difference.
It's a stark contrast, absolutely. It shows a really unique supply situation happening specifically in Texas.
Okay, so this leads to the obvious question then. If inventory is surging like that in Texas, just piling up, why haven't we seen prices fall off a cliff yet? Why aren't they significantly lower already?
Well, here's the unfortunate truth, I guess, for buyers who are hoping for a massive price drop. For home prices to really decline dramatically, like in a true crash scenario, you basically need unemployment to go up sharply,
Right.
which is really just another way of saying you need a recession.
So no recession, no major crash.
Pretty much. Without that kind of major economic shock, prices are much more likely to follow the pattern we've seen in other, let's call them bubble cities that saw huge run-ups. Austin is the poster child for this right now.
Okay, what happened in Austin?
Well, after their inventory surge, Austin prices started what you could only really call a slow, painful decline. This started back in May 2022. The average listing price went from a peak of around $629,000 down to about $494,000.
That's a pretty big drop, over 20%.
It is a substantial drop, about 20%, yeah. But the thing is, for a lot of people, it still doesn't feel like a crash because it's happened so gradually. It's been more like watching a, slow-moving train wreck over 2+ years.
A slow bleed rather than a sudden collapse.
Exactly. Not a sudden collapse like '08.
So when we talk about a housing crash, what this really means is to get that kind of dramatic fall like 2008, you fundamentally need an '08-like economic situation, a major crisis.
Precisely.
But, and this is maybe the bigger picture, to really understand why that kind of collapse is, well, maybe less likely now, or at least different, we have to zoom out and look at the absolutely unprecedented economic times we've been living through.
Yeah, this broader context is absolutely critical. You have to understand the U.S. has been on one of the most incredible bull runs in the history of capitalism. I mean, seriously.
Right.
Many economists argue that since the early 1980s, we've only really felt the full impact of two major recessions, the dot-com bust around 2000 and then the big one, the 2008 financial crisis. Outside of those two events, the country's essentially been on this unbelievable economic winning streak. There's a PhD economist, Sven Corinne, who actually describes it as being inside a 42-year-old stock market bubble.
42 years. Wow.
Yeah, and the numbers are kind of mind-blowing, but they've almost become normal. Look at the S&P 500. It's up 43% in just the last year.
43%?
And 90% over the last 5 years. 90%.
Crazy numbers.
They are crazy numbers. If you look back historically at S&P bull markets since like 1928, you see average gains, sure. But then in recent decades, you see these periods where the market just explodes 200%, even 500% gains. It's an acceleration of wealth we've never seen before.
It really puts it in perspective.
It does. I mean, the stock market index was around 107 back in 1982. Since then, including dividends, it's gone up almost 60 times in 42 years.
60 times.
Yeah. Driven by basically two staggering bull runs. First, that huge expansion from the 80s through the 90s until the dot-com bubble burst. And then after the 2008 crisis, from the bottom in 2009, the market increased almost 10 times again. So, yeah, you could absolutely call it the greatest, most sustained bull market in history. It's like a 44-year run that just doesn't fit the old patterns of market cycles.
Okay, so bringing this incredible bull run context back to the Texas housing market, what does it imply?
Well, bringing it back to Texas, given that weaker housing situation we're seeing now with the rising inventory, it wouldn't be surprising at all to see that same kind of slow, gradual price erosion that Austin's been going through for 3 years start to play out in other Texas cities like Dallas or Houston.
So more of that slow bleed.
Potentially, yeah. The data suggests the peak prices are definitely behind us in most areas. Right now, things are mostly flat or drifting slightly down. We should probably expect, further weakness through the rest of this year.
But not a crash.
But a major widespread crash, that seems really out of the question unless the whole economy just completely falls over.
Right, unless we hit that major recession scenario.
Exactly. So, yeah, cities like Houston and Dallas will likely see prices soften, maybe continue that slow decline. But for prices to go all the way back to their pre-pandemic peaks, that seems, well, simply impossible without a huge economic downturn, the kind we haven't actually experienced in over 17 years now.
Okay, so let's distill this. What does all this mean for you, the listener, trying to make sense of the market? I think understanding these deeper forces, the supply dynamics in Texas, the historical context of this long bull market, it helps you see past the simple headlines.
Yes, I
It
very
makes you much
correct.
more informed. You can see this unique paradox in Texas. You understand what that small price decline really signifies with the inventory behind it, and you get why a true 2008 style crash isn't necessarily the default expectation anymore.
That's the core connection, definitely. A really dramatic housing crash is just fundamentally tied to a major economic downturn. And as we've just laid out, that kind of big economic reset, well, it's been missing in action for a
Right.
remarkably long time. And that absence has created this really unique, kind of complex market environment we're navigating now.
So maybe the final thought to leave you with is this. In an era that's been shaped by such an incredibly long and powerful bull run, what does a normal market correction even look like anymore?
Good question.
Are we perhaps witnessing a new kind of adjustment, where maybe this slow, painful decline, like in Austin, is the new way that unsustainable gains get unwound instead of those sharp crashes we saw in the past? And if so, what does that mean for our expectations, for how we plan moving forward? Something to think about.